Gentlemen, I hope you had great time yesterday and in last night's party, and you're ready to continue day 2 of IFX Expo International 2024. To start the day, I am excited to introduce the first panel, Bridging the Gap, Collaborative Futures of Banking. Please help me welcome on stage our wonderful moderator, Lissele Pratt, CGO and co-founder of Capitalixe, who will introduce her panel. Lissele, dear speakers, the stage is yours.
Good morning, everyone. Pleasure to meet you all, and thank you very much for coming. I'll give a quick introduction of myself, and I'll leave it to the panelists to introduce themselves as well. So my name is Lissele Pratt. I am the co-founder of Capitalixe. We are a payments and banking consulting firm specialized in helping high-risk industries. Also, I am a Forbes 30 Under 30 honoree, TEDx speaker, podcast host of Success Secrets, and FinTech Businesswoman of the Year. Thank you. I think you can just speak.
Hello, my name is Tim Ferland. I'm the CEO of LetKnow Pay. LetKnow Pay is a crypto payment processing gateway. We've been in the market for 5 years. We deal mostly with higher risk industries like Forex and online casinos. My role as a CEO, I deal with all of the regulatory issues, all of the bank onboardings and things like this. So I'll be speaking here from a perspective of a crypto company trying to access the banking industry and the challenges there. Thank you.
Hi, my name is Kebbie Sebastian. I'm the CEO of Merge Money. We are merging local payment rails globally to enable platforms to collect, hold, and move money instantly across all countries or currencies. Previously, I led global product development at Barclaycard, led PayPal's financial products business, and supported Stripe as an advisor in the expansion in Europe and Asia.
Hi, I'm Andreas Papadopoulos. I work for a brick and mortar bank. I feel like the Flintstone in the room. I am in charge of lending to the SME sector locally, and I'm also a TEDx speaker. I'm heavily involved in education. I'm the founder of Junior Achievement Cyprus, and I do beach guidebooks.
Very cool.
Hi everyone, my name is Antonis Metaxas. For over a year I have been working for Velexa as a strategic advisor, a leading wealth tech company that provides innovative trading and investing technology for all financial assets via APIs we can embed, or via fully branded platform deployments. So in the last 14 years, I have been actively engaged with asset management, product development, and sales growth strategies. Currently, I'm working closely with sales, marketing, product teams in order to optimize internal procedures in order to create new strategies to exceed our revenue channels, our revenue goals. Of course, I lead business development, and last but not least, I'm helping to close the last stages of closing deals.
Good morning, everyone. My name is Michael Ioannides, and I am the country manager of Visa in Cyprus. Well, Visa is a well-known scheme, and definitely we are trying to support all the participants in their strategies and in their money movement interactions around the globe.
Amazing. So as you guys can see, we have a very diverse background of leaders in the banking and payments industry, which is going to make this panel very interesting whilst we start exploring the futures of banking. So my first question to you guys is, how do you see the relationship between traditional banks, neobanks, and crypto banks evolving in the next 5 years? Let's start with you, Tim.
From our perspective in the crypto industry, we're expecting that over the next 5 years, there's going to be a shift from what we would consider competition of a decentralized economy versus a centralized economy, and we see hybrid services coming into effect We're already experiencing some of that with EMIs and other neobanks adopting crypto as an internal solution. We've been approached several times about becoming an internal exchange for certain places. So we expect that this is going to be a continuing trend, that the shift from competition to collaboration is going to continue. There's got to be some changes and harmonization in the jurisdictional regulatory environment and things like this, but that's what we see coming in the future.
Fantastic. Very interesting.
Do you want me to go next?
Yeah, you can go next.
I think traditional banks versus fintechs, I would say traditional banks envy the agility and user experience of fintechs, so they will want to be more like fintechs. Fintechs envy the regulatory coverage and licensing of traditional banks that allows them to go into higher margin revenue streams like lending. So you have traditional banks wanting to be more like fintechs and fintechs wanting to be more like traditional banks. I think that's the interplay that you'll see over the next few years. Crypto, my sense is, will probably be too early to go into the mainstream. Despite Mika and others, it'll take a while before there's widespread embracing by traditional banks.
Okay, fantastic. And you?
Yes, I would like to echo Kebbie's comments, really. I think neobanks and traditional banks are going to, the boundaries will merge and it will be easy to separate. The two crypto banks are a little bit further away. I'm not sure how that would evolve, really. Still have a big question mark there.
We have yet to see.
From my point of view, I think that since the financial landscape is evolving really rapidly, I think towards to collaboration instead of competition. So I think that traditional banks will try to utilize the agility and the technology that neobanks provide, while on the other hand, let's say neobanks or digital banks, they will try to get benefit from the well-established base and resources that traditional banks provide. On the other hand, let's say neobanks, of course, they will, traditional banks, will get benefit from new demographics and new services that neobanks provide. However, the competition will be strong. So since neobanks, they will try to invest on innovation, they will get larger market share. This will force traditional banks to invest in innovation, to improve the digital offering. So this will help a lot, finally, the clients, since they will get better choices, better services, and of course, lower fees.
Well, from my end, I would say that this is already happening. In the space of Visa, we could see all the participants collaborating together, and us providing a level playing field for them as well. On the other hand, I would say that the traditional banks are echoing what was previously mentioned. Traditional banks are moving rapidly into their digitalization programs, and they're trying their best to become more agile and more efficient compared to what was the previous scenario. At the same end, I would also like to highlight that the regulatory framework is even changing at this moment, to the extent that they would like to provide a sort of a level playing field for all the participants to move along with their services. So I believe that we have more to see in the future, but in terms of this particular ask, I believe that collaboration will be improving, and I'm really keen to hear from my partners here, their experiences in terms of their existing collaboration into the system. Thank you.
Yeah, it's very interesting to see, and I'd have to agree with you that from what you were saying, that neobanks and traditional banks are starting to evolve a lot more rapidly, but crypto is still quite a while away. But it's not to say that it won't be also collaborating even more in the future as well. We'll just have to see. Which brings me on to my next question, and this one is for Michael. What are some successful examples of collaboration between traditional banks and neobanks/crypto banks that you've seen or been a part of?
Well, we've seen quite a few examples of that. I would just concentrate on what we are seeing in the last 2 years. We are seeing a huge collaboration in terms of the money movement space. an increased demand in terms of providing the participants in the system with much of risk products, because one of the main items in the industry at this moment, I believe, is how we compact fraud and how we manage risk. So to that extent, those will be the primary items, but in terms of money movements, I would say that we have seen a huge demand in real-time payments, and that comes under Visa Direct. To that respect, it was practically a push from the participants to increase the verticals that we provide the service, and that is apparently very obvious because of their businesses being structured in such a way to become more agile and make some new offerings. So we have also included, beyond cards, we have also included account-to-account payouts and wallet-to-wallet. So we are seeing a huge demand to the extent of 8.5 billion endpoints in terms of reachability.
Fantastic. Yeah, I can also see the difference in real-time payments, cross-border payments as well. It's evolving very, very rapidly with new technology, a lot of collaboration between banks and payment providers and everything else, and which also brings me on to Kebbie as well. It would be great to get your thoughts on this question.
I think in terms of really practical examples, I would call out Moniz and HSBC. There's a platform called XYB in the UK, so they have partnered on that. If you go back in money movement, you have, of course, JP Morgan and Aurum, or Stripe, Adyen have always had acquiring banks that they partner with. And I think that is the name of the game. There is co-opetition. PayPal would not exist if not for Visa, and so on and so forth. It's par for the course. With the neobanks, most large banks are safeguarding banks to most of the neobanks. So there is inherent collaboration there. And I think those are some practical examples that I've seen.
Mm-hmm. Fantastic. Thank you very much for that, Kebbie. Now, on to my next question, Tim. What are the biggest challenges you face when trying to collaborate with other types of financial institutions?
Well, I think obviously the elephant in the room is the regulatory environment. The risk appetite of the regulators is fed down to the risk appetite of the financial institution, and that rolls downhill to us. When we want to open a relationship with a financial institution, we struggle with the perception of what crypto is, how it is used, whether it's transparent or not. There's a lot of issues with the perception of crypto in terms of its usability, its transparency. So these are some of the main struggles. There's also issues with the technological aspects. If we want to engage with a financial institution as a partner, as I mentioned before, becoming an internal exchange for them, there's certain integrations, technical aspects of it that have to be adopted. But I think one of the other biggest things, as I mentioned several times, is just the perception of crypto, and we're actively trying to promote crypto as a transparent future option for payment opportunities, along with, not instead of, the traditional banking.
Mm-hmm. Yeah, excellent. And it's funny that you mention about regulation as well, because we all know how difficult regulation can be working with certain types of industries, especially crypto. And I feel that banks, traditional banks especially, they're still very much behind on understanding fully the capabilities as well as the ins and outs of how crypto would work in a regulatory standpoint, right? So what would you say about that?
Well, there's examples of, for example, I would move away from talking about crypto and talk more about blockchain. The adaptation of blockchain in the financial industry is something that is being looked forward to. There's several examples of, for example, Ripple, the Ripple Tangle being used in financial institutions like American Express and Santander Bank with great success. So there's obviously a good future ahead for that kind of collaboration. If you don't look specifically at crypto and just look at digital assets or the decentralized ledger technology, there's a lot of aspects that are, to look forward to.
Yeah, I completely agree. And I would also say that it's the blockchain technology that's going to be the most advancement in the future as opposed to cryptocurrency. Don't get me wrong, they're great, but I believe, like you mentioned, it's the blockchain technology behind it, right? That's the most innovative.
Can I add something?
Yeah, of course.
I just wanted to mention on regulation, I would just add that regulation in Europe, of course, MiCA is a great step forward, but the US dollar represents 59% of global reserves as a global reserve currency, and 49% of SWIFT transactions are in US dollar. So while MiCA for Europe is a great step forward, you do require US harmonious regulation to kick in order to get mainstream adoption, is my perspective.
Very good perspective. Thank you for that, Kebbie. And next question now, which is Andreas. How can traditional banks stay competitive in an increasingly digital, decentralized financial environment?
Yes. Traditional banks, they are sitting on a gold mine, right? A gold mine of data on their customers. They know their history, their financial fingerprint, I could call it. And the challenge is how that can be converted into a seamless adding value engagement to their customers. Regulation is a roadblock in some ways, but I think that's the future. Successful traditional banks will be able to do this conversion, whereby the customer will seamlessly, effortlessly engage with the bank at various stages for all their financial needs. And perhaps, as we had the panel yesterday discussing here, it could even go to other types of services as well. But let's first focus on addressing the financial element, and then they could do some more.
Mm-hmm. That's very interesting. And what would you have to say to this, Antonis?
Look, particularly traditional banks have a very strong track record, right? And security, but need to adapt in order to stay competitive. So from my point of view, they must embrace digital transformation. So the banks need to provide a seamless digital experience, similar to neobanks or digital banks. So imagine a user-friendly application that has a very easy navigation, authentic, let's say multiple security authentication methods. The users can manage all their finances. They can get loan approvals, transfer funds. They can invest everything and everywhere and anytime, all on the go. So this is something that at Velexa we have seen that since we have implemented many similar solutions, we have seen significant business growth and improving many KPIs. It's like customer retention, clients' lifetime value, and so on. Now, secondly, I would say that they need to leverage trust and expertise. Traditional banks have a very strong advantage here. They can act as the trusted advisors by providing personalized guidance and wealth management, apart from the typical financial actions. By using AI-powered tools, data analytics, they can analyze customer data, as Andreas said, since they do have lots of data. So they can provide personal insights, budget recommendations, and in parallel, since they do have experienced investment advisors, by using this data, they can provide customized investment strategies in the long term. So this is something that they need to get advantage. We have seen that based on some research, latest research in US, only 20% of clients, bank clients, have received personal advice. So I think there's a big room for the banks to grow, right? And last but not least, they need to approach, let's say, decentralized finance cautiously, but strategically. So by using blockchain technology, they can, let's say, provide secure cross-border payments, as we said, and by doing this, the traditional banks can be a respectful source of information by establishing very secure clients' relationships. This is my opinion.
Those are some very, very insightful comments there, and I can see, obviously, very different comments from both of you, given your backgrounds.
I am representing the technology part, so...
Yeah, absolutely. And I do have a question off topic as well, which is for Andreas. Because of the advancements from neobanks and everything like that, do you feel that your bank has lost customers to that at all?
Not exactly, not losing customers, but losing parts of their wallet. Banks still, why were banks built the way they were built? To inspire trust, right? The buildings, the whole atmosphere. When someone deposits their money, they need to feel safe. And you're giving your money to someone, you have no clue who they are, the building helps. That's the traditional thinking. Obviously, once it's there, it doesn't mean it can't go anywhere. And with PS2, and with the liberalization and the openness of payments, a significant part of the wallet is going to other channels, but not the whole customer. I think the customers are becoming more savvy, more sophisticated. They're checking out the costs across, and they choose what's best for them, while keeping doors open as backup in the traditional sense.
Very good to get your insight on that. Thank you. So, Tim, how are current regulations impacting the growth and operation of neobanks and crypto banks?
Well, I can't speak for neobanks and I can't speak for crypto banks, but from a crypto perspective, a company who is actively trying to engage with banks, it depends on which jurisdiction you're talking about. Since Kebbie had brought up the US dollar, it makes sense to bring up that trying to get a correspondent bank to process payments in US dollars through the SWIFT system is very difficult for crypto companies, because the US government has dictated that crypto is high risk. Therefore, the central bank says to the correspondent banks, if you want to use US dollars, you can't process anything with crypto. So there's a lot of barriers for crypto companies, I would imagine for crypto banks as well, to get those accounts and engage with financial institutions to be able to process that way. MiCA is obviously something that every European legal entity that's dealing with crypto is looking forward to, but also dreading, because it's such a big legislation made by people who have talked with people who deal with crypto, but you can tell there's not a full understanding of what crypto is, what blockchain is. There's technological holes in the legislation. Specifically, I can relate to the travel rule, where there's no solution yet produced as to how cryptocurrencies can add the information required in the travel rule into a transaction that both parties receiving and sending can see all the data. Because of GDPR and other issues, there's a lot of holes there. So hopefully they'll continue to evolve this legislation, but that's one of the biggest European concerns at the moment. Overall, the regulatory environment is supportive in terms of getting a license. Once you are licensed in Europe, for example, it adds a lot of credibility. There are issues in the regulatory environment where there are other holes. We've seen that regulators aren't familiar with certain jurisdictions. There's more jurisdictions that come out that are producing fake licenses or unsupported licenses. Comoros is a good example of that. We've seen entities like the Independent Authority of Anjouan.
A lot of offshore jurisdictions creating crypto licenses.
Well, these are
right?
companies creating the licenses, which are not supported by the government.
Oh, wow.
So this is something that we actively, our compliance team actively investigates new licenses, new jurisdictions to find out directly from the government, is it supported, what's the background, what are the restrictions, what are the, what does it include? So these are areas where there needs to be more due diligence in the regulatory environment on both sides. People have to be more diligent in looking to see what they're dealing with. Because in these licenses that have been issued to companies, those companies aren't even aware that they're a fake license. They've gotten bank accounts with those fake licenses. And, unfortunately, there will eventually be repercussions for that. But anyway, so those are some of my insights on the regulatory environment and how it's impacting things right now.
Thank you for that. And yeah, I have to agree, because even though crypto is seen as a high-risk industry, and there's going to be places out there that will try and create a license or just to get people onboarded so they feel secure. And this is also a concern as well, because a lot of scams happen through this way, a lot of fraud happens through this way as well, as I'm sure a lot of you know. So in this industry, you do have to be very, very careful. And it's all about the clients and customers being educated on what is safe and what's not. Which also brings me on to my next question, which is for, we'll start with Kebbie. How can financial institutions innovate while still adhering to strict regulatory requirements?
So my perspective would be on twofold. Regulatory requirements doesn't necessarily hinder innovation. For banks, what's hindered innovation is investment in technology. And I think leading up to the financial crisis and after, IT got outsourced. And now you have a lot of banks bringing it in-house. 40 to 60% of tech is being brought in-house. JP Morgan famously canceled a $5 billion contract with IBM to bring tech back in-house. That will help them innovate and catch up with neobanks or fintechs. The second part is also, I would say, that the drive has been towards universal banking and create a one-stop shop. The casualty of that has been product differentiation and client experience. And so specialization in the way that fintechs do a few products really well, I think will be a path to innovation while keeping a foot of regulatory requirements.
Fantastic. And what would you have to say to this, Andreas?
I think the regulatory framework is a great opportunity for fintechs. I think they can play a really significant role in helping. We've moved from KYC to KYT, know your customer, know your transaction. So AI and fintechs, I think, can assist banks to streamline screening, where the human element can come in after using technology to cover regulatory matters. And I don't think regulation will become softer. I think as long as there's human greed and human nature, regulation, when it comes to accepting money, will be there. I wish technology or a system could ring fence that, but I think even if one loophole is there, it just can be lifted. So rather than go against it, we need to embrace it and use the tools that have become available and will become available to go through the pain of regulation, but at the same time in a faster and more efficient way.
Fantastic. And yeah, it's interesting that you mentioned about regulation and the future of it. It's an AI as well, because AI is a very interesting thing for transaction monitoring and making sure, because it can process data far quicker than a human can, right? It's machine learning. And with the transaction monitoring, which is a very big thing in banking and payments, it's going to be able to spot fraud a lot quicker, able to spot anomalies quicker in transactions as well, which is going to really help streamline the payments process. Which also brings me on to my next question, Antonis. How is digital transformation enhancing the customer experience, and what innovations are you most excited about?
Nice question. So digital and decentralized finance drives this change. So I think that by focusing on personalized investing, you can hear many times from me personalizations, sorry about that, social learning, financial literacy, this can help banks to create a more engaged and informed customer base by building trust and loyalty and a very vibrant financial ecosystem. So, which means that digital transformation means that to provide a seamless digital experience across all platforms. So having mobile applications have become recently the central hub for even for the whole new generation, even for me, of course, I'm doing everything from my mobile application. So this helps a lot for us, let's say Velexa, because we want to make investing accessible to everyone. So as I was saying, let's say about social platforms, why social platforms have very big impact, because they create a sense of community, since allowing the customers to follow investment ideas of other experienced investors. I know it doesn't have to do about generating volume. I get it, it's significant to create profits, but this helps the customers to grow and learn all together. And now financial literacy has a very big aspect. Imagine that a customer has access from the basic investment principle to the most advanced trading strategies within the application, within the bank application. So it's not about basic, let's say, recommendations. They can get personal financial advice based on the investment goals, the risk tolerance, and the investment horizon. So in a nutshell, this is what we believe. I need to focus to highlight that, let's say, picture customers having a very unique investment portfolio, because by using advanced data analytics and AI, banks, they can provide very personalized advice, okay? And the customers appreciate that because they feel valued and supported from the banks. So this is, in a nutshell, what I believe about what could be the most innovative.
So AI, you would say, is going to be one of the most innovative things.
I have been recently in Google event, marketplace, since we have established a new partnership with Google. Believe me, the whole marketplace are full for AI. Right? There's so many new ideas, particularly for the investing perspective. They want to personalize. They want to create unique, let's say, experience based on the data, on the trading behavior of its customers. So investing goals, I'm not saying robo-advisory, which is, again, within the same domain, but there's a huge trend there.
Mm-hmm. Fantastic, thank you for that. And on to Michael. What are some of the most significant trends in fraud observed in payments today?
Well, going back to what Andreas said, we need to know our transactions. And definitely, we know the transactions best than everyone else by introducing a lot of AI in monitoring. From our systems, we do say that we monitor full attributes of each transaction on a millisecond basis. Practically, we are authorizing something around 500 transactions per millisecond, full attributes. We have seen that fraudsters are deep learners and have also utilized AI, which is something that we should always be concerned about. And we have seen fraudsters being very, very active in all spaces. And to that respect, we have just invested in the last 2 years more than $10 billion in fraud monitoring and risk monitoring services. To that end, I would say that the impact is huge in the industry, and that impact could only be contained if all the stakeholders work together. So it's about collaboration.
Collaboration. And yeah, this is also the scary thing about AI as well, because it can be so great with transaction and compliance and everything, but there's also the fraud side where scammers become more knowledgeable on how to use AI for fraud and those reasons. So we have like deep fakes. People can use each other's voices for to scam as well, which can be really crazy, and also for their faces. So that's another thing for AI. And
well, just on your note, from our experience, it seems that just 3 seconds of a voice recording is sufficient to reproduce a full attribute voice of each and every one of us. So it's something that it should worry us. I would say be careful. But the systems behind the scene are always on top of this.
I think we have the same problems with any new thing that was happening. So every time we had something new, right, there was always a concern, okay, how we can mitigate the risk. But I think that at some point, okay, this is a continuous effort, all right, between both sides, all right, to involve, all right?
Yeah, and that's what creates the advancements in the industry, right? There's obviously AI, but then there's how do we combat fraud through AI, right?
Exactly.
Which is another exciting area. Is also another question for you, Michael, is what is the role of technology in fraud prevention efforts?
Well, that's a very good question. And in that area, we have introduced full tokenization in everything. So practically the next step towards securing transactions beyond monitoring the attributes of each transaction is also introducing a tokenization. It's something that we all use in our daily activities through our mobile wallets, which is practically our plastic card being tokenized. So we are carrying a token, and that token is now extended to the non-face-to-face world on the e-commerce side, where we have seen there quite of an increased fraud and user experience not being at its best. So at this moment, we are on the basis that the actual tokenization world is increasing at huge speed. We are introducing click-to-pay as well. So click-to-pay will happen in the e-com world, and it will be practically replicating our existing UX on the face-to-face by touching a button with full credentials, full biometrics, so that on the one aspect, it will be securing the transaction and making the user experience much, much better. From experience in the past 6 months, I would say that from the introduction of tokenization just in the e-com world, we have seen a fraud reduction of about 50 to 80% and improvement in authorization from 5 to almost 9%. So these are tangible activities, and I believe that we are just on the first step in terms of how we tokenize everything. And sharing some news that will be upcoming soon is that we are, because we have heard a lot of voices asking us to support the real-time account-to-account security, which is currently under a lot of fraud because real-time payments are equal to real-time fraud. We will be also introducing the payment account tokenization. So practically, we will be tokenizing even our current payment accounts that we all use.
Worth adding here that about tokenization, there's a big trend as well in investing and trading. You know that, right? So tech platforms trying to tokenize traditional and digital assets, but with something you expect. But you should know that they are trying to tokenize even unique portfolio, thematic portfolios. So in order to be even more, let's say, personalized, as you said, I'm using personalized a lot, but this is the new trend because, as I said, the clients want to feel appreciated and know your customer, not just typically,
not just a number.
Exactly.
Well, and actually, adding to what Antonis has just said, we are having new propositions into the market, and practically we provide the benefit to the consumer to adjust his or her preferences in terms of how their data will be used, how their tokenization will be helping them to do their life easier, to do their selections more securely. So it's not just tokenization, it will be associated with user authentication and also user choice, because it's not just the data that are being consumed or utilized, but it's how this data provide value to the end user. That's very, very important, and we need to keep it as a highlight.
Thank you very much for your insights, Michael. Very much appreciated, and Antonis as well. So I just wanted to open up questions for the audience, or maybe to share your thoughts as well. Does anyone have any questions that you would like to ask, or would you like to add anything into this as well? Yes, please. What's your name?
Hi, this is Kamalika here, and continuing on the conversation that we were having about fraud, don't you think the future of banking should also do a lot more about financial literacy? Because I come from India, and in India we already have UPI, which is a real-time account-to-account transfer that happens within 3 to 7 seconds. And we've seen a massive adoption of UPI in India, but along with that, a lot of the seniors have been, duped into sending their hard-earned money over all those years to, spurious accounts across the world, and they've been struggling a lot to recover that. So what's the panel's take on this?
Can I mention? Thanks for that. It's a great point. I think faster payments equals faster fraud, for sure. And there is a march towards real-time payment systems all over the world. There are 80 plus that are live or in process. The challenge is more, it's social engineering that is behind a lot of people getting duped. And social engineering requires, I think with the point you're making, it is education and awareness more than systems that can fight that. So I think investment is at a macro level that's needed in order to fight that.
Just adding, because if you remember, I talked about financial literacy before, and we discussed about regulations. I think we should expect from the regulators to force all the players to invest in financial literacy. This is something that I'm expecting, particularly from Europe and of course US, because we need to educate, we need to train the users, the customers, how to identify such, let's say, cases, all right? So from my point of view, we should expect that this will be a legislated, norm for everyone, sooner or later.
Amazing. Yeah, thank you. Great question as well. And thank you guys for your answers. So we're just coming to the end of our collaboration and our panel today. But if you guys have more questions, we'll be waiting outside. If you have any questions that you'd like to answer or would like to come and say hi, then yeah, come and see us outside, please. And yeah, let's give a round of applause for everyone.